MACD and MACD divergences and how I use them. So first off, the settings that I use for the MACD are not your traditional settings by any means. I prefer to slow things down a little bit. The MACD as a whole just seems like a slower indicator. It's not one of those quick snappy things. You can make it, but it just doesn't seem very reliable that way, and its design overall is much more applicable to the slower realm. So first off, the settings that I use for the MACD are not your traditional MACD settings. I prefer to slow things down a little bit just because the way that the MACD sort of operates is as a slower indicator. As a whole, its entire design seems to be just as a slower paced indication. So because that is the way that it is, I like approaching it with these types of settings instead. The fast, which is not fast at all, set to 21, the slow set to 55, and then the smooth set to 8. And obviously those are all Fibonacci ratios. I'm a big fan of Fib ratios, and they all kind of crept their way into the indicator. My cat says hi there. Now, with the indicator being set to those, what this allows us to do is utilize this in two different primary functions. The first primary function is going to be for short-term trend continuation. Say that 5 times fast. And then the second is for divergent high confirmations. Another one with more words in the dictionary out of the way here. We can kind of explain these a little more. So the first one is for short-term trend continuation. So we can zoom in a little bit closer here and get just a little bit more zoomed in. And really what we want to see here for the trend continuation side of things is the MACD staying in the direction that we're looking to go. So as an example, if we're looking for this bear drive to the downside, right? And I want to find a way to get in short, but I don't really know where to get in short. The market's breaking away. How do I find a way in? Well, what I can do is I can wait for the market to begin pulling back, but the MACD still remaining bearish. Like here is a perfect example where we have a little pullback. It went a little bit more sideways than pull back, but that's a good thing. We're not seeing continuation up. It's not bouncing. I'm looking for trend continuation. It's to the downside. And if we look at the MACD is firmly crossed and below, and the histogram is down. Everything is pointing down. It's giving us context to the downside where if I need an extra confirmation or an extra layer of confirmation for the short term, this is a really good way to get that involved. Because now if I get a signal inside of here and I'm waiting for that one extra thing and I'm looking around and I've got the consolidation, I've got the pattern, I just need one more thing. Oh, the MACD, hey, we've got a really strong breakdown. I wonder if this is applicable. And sure enough, we can see while the market's going sideways, the MACD is still pointed down aggressively. That's what I mean by a trend continuation filter. It's a really good way to give us a bias for more continuation to the downside. Well, at least in that case. Now, the other alternative is utilizing it for a divergent high confirmation. Now, a divergent high confirmation, this is something that I'm going to zoom out on. I want to zoom out and I want to look at the larger perspective. And one of my favorite things to see here is while the market is creeping up to a high, in this case, I've got a chart of Ethereum, and when the market's creeping up to a high, what I want to see is our standard 3-peaked top. This is one of my favorite rotations off of a high anyway, but we've got the first move up, the second move up, the third move up, and it begins to rotate. One thing that I love finding as a confirmation factor of this is finding the MACD allowing 3 lower highs. We're seeing that excess confirmation demonstrating that the underlying, the flow, the river underneath is running into some trouble. Yes, the market's making higher highs, but realistically, whatever it is that's the backbone of the market that's pushing it in that direction, it's starting to get weaker and weaker. So let's take a look at a more of an application of it rather than just a few examples. This is just from this past Friday, and we've got a very nice few things that's set up here. Obviously, there's a lot of good volatility, but one of the big things that stand out is looking for that 3-pronged move, my favorite type of reversal patterns. We've got a nice little pullback after a very strong rally to the upside. The pullback is dipping lower. We've got the first move down, second move down, third, and you could even say there was a fourth inside there, that little bitty one, but altogether that would be 1. And if we look at the MACD across the bottom, we have a continuation divergence all the way across. And that is a very good sign. That's showing that this move is potentially gearing up to be closer to the bottom. It doesn't mean that it has to reverse right this second. But if I start seeing signs that sellers are beginning to fail, then I've got a very good clue that I can at least try to buy for a bit more continuation to the upside. Once that begins falling apart, we actually see the exact same thing on the other end. We've got 1, 2, and 3, and across those 3, we've got actually it went higher and then went down across the next one, so it's not as good, but, well, I mean, you can see the follow through, it worked either way. Sometimes it doesn't have to be perfect. But with this type of continuation down, now we can zoom in and look for a bit more of the aggressive side. We can look for the trend continuation side of things to play out instead. So since this move down will have surprised a lot of traders, we know that we've got some aggression behind us. Now, we might not have known initially like right here, but when it's continuing down and down and down and down and down, it's fairly obvious there's a good amount of strength. So what I'm looking for are continuation moves, and let me zoom this in a bit closer just so we can see this a bit more visually appealing here. So we want to find continuation moves down. Now, like I said, at this point, I don't think it's fair to say that we know this thing is crashing lower, even here, even here. But when it starts breaking really aggressively lower, what do I want to see? I want to see bounces back, but the MACD maintaining. We've got a nice consolidation, a very nice sideways move, but if we look down at the MACD, what are some problems, right? This is telling us that it's going a bit more sideways, a bit more kind of choppy sideways bleh. But if we go before that, you'll notice this nice little pullback right there, right? If we look at that pullback overall, the MACD never crossed. And that's the purpose of this type of trend continuation and why I wanted to show that gross example first. When you're getting into this, it's typically going to be a fast continuation and it's not going to hang around. You're not looking for this thing to go sideways forever. This is a trend continuation. It should be a move down, quick pause, boom, and go flying lower. Now, it doesn't mean that if it doesn't go immediately further down again, that it's going to be a failure. But just like we saw here, initially, if we look at the overall move, when we've got this big drive down, we've got some nice bear bars, but it's already crossing higher. There's no real continuation. That was the clue that it wasn't going to be a quick one. It still fell lower in the end, but you didn't have to sit through all of this garbage first. You're looking for a quick continuation, and that's it. That's the beautiful thing about that type of filtering, is that it is designed, it's funny, it's designed for a faster term move by utilizing a slower MACD. So for me, when I'm looking at the MACD, this is where I really kind of find the true power of the MACD as an indicator, and it gives some massive clues in what to expect, as well as just confidence in entries if you're talking the shorter term confirmation moves. It's an incredibly useful tool, and you know, when we're going over the MACD in any indicator, is it necessary? No. But can it be useful? Definitely. It has a huge role in usefulness. So anyways, like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next one, have a great day, and we'll see y'all then. Thanks.